What is going on, guys? You are welcome to today's video. In today's videos, I'm going to do what I call the weekly outlook. This is my weekly outlook for the coming week. And actually, I promise to be doing this every week, trying to give you my weekly outlook so that you can be able to profit from the signals from where I am planning my trade. And actually, this will be beneficial for you because you'll be able to understand how I plan my trade, why I plan them. So basically, as a trader in this channel, we only trade smart money concept in conjunction with ICT. Majority of our trading is based on as a smart money concept. That is exactly what we do. Majority of our trading. And remember, when you're trading smart money concept, there is two things that is very, very important in your trading. The first thing that is very important is your higher time frame intention. Where is your higher time frame candle going? If you cannot dictate the closest price the closest key level, which your price is going on the higher time frame, then trading on the lower time frame is just wasting your money because the market will just wreck your money and go away with it. So this is why ICT call it daily bias. Your bias is your higher time frame intention, your higher time frame direction. What is the key level that the higher time frame is going to? So my higher time frame here is the monthly, weekly, and the daily. So these are the three time frames. But because for the monthly, when do I use the monthly? I use the monthly when the monthly candle open. If the new monthly candle open at the beginning of the month, I will check where is the new month going. What will be the possible key level that the monthly is going to key in. Now, the second thing is that when the new week open, this is also what I'm going to do because this week has ended. We are opening new week tomorrow. So I'm trying to look at the weekly candle and see where is the possibility of the weekly candle going to this direction. We are looking at the likelihood of expansion of the week. So in order to find either 1 or 2 days within the week to capitalize on them. You see, this 1 day or 2 weeks is going to, 1 day or 2 days is going to give you more than 300 pips in your trading. You don't even need pips in trading. What you need is your risk to reward. So if you're able to catch one big move at the beginning of at the middle of the week, then you'll be able to catch at least 1 to 5. Sometimes in 1 week, I catch 1 to 10, 1 to 15 in just one particular pair. So assuming I have 3 pairs that give me setups. So I'll be able to catch what? I'll be able to catch even 30 pips, 40 pips. I'm talking about reward. When we talk about, when I trade, I don't look at how many pips, I look at my risk to reward. The risk to reward is very important. I'm risking $1 to make $3. Are you risking $10 to make 300? Or you're risking $100 to make $500. It's possible. This is how we do. Somebody may risk, may be taking 100 pips, but still it's just $100. But somebody will be taking 10 pips, but still it's what? Is 1,000 because maybe he's risking $10 to make $1,000. So it's basically, it doesn't mean the number of pieces. What is important is your risk appetite. How much are you risking? How many percentage of your account are you risking per trade, per signal? So basically, when you're trading ICT concept, what you should be looking for, the first thing you should be looking for is your higher time frame. Higher time frame objectives. That is higher time frame targets. Let's use target. This is the most. Where is the higher time frame going? Where is the weekly going at the new week open? If we know where the key level, the weekly is going, the next thing is that why? That is what we call the narrative. Why will this thing, why will the weekly like this? Why would the weekly go to that level that you're talking about? You need to find reasons why the weekly should go to that key level. Then the next thing is 3 is where will this price reject from? So you need to see where is price, which key level price is going to use, key level that we are going to use to trade to that key level. So you need to look for what are the possible key levels that price is going to use in order to go to your intended direction, because you may have your directional bias. So, okay, let's say for example, you're planning, you want to go from Nigeria maybe to UK, or you're going from one country or one state to the other. Then you need fuel, right? you need fuel to fuel your car to go. So where is the fuel? Which is the one that is going to fuel this journey? You have it, you have your plan, you want to go to one destination, you need fuel. So the key level the price is going to use to go into your direction, or the structure the price is going to, the key level, the structure the price is going to respect to go to your done. Then the last thing is, then the third thing is your confirmation. Your confirmation. So your confirmation that yes, likely this key level is, today we have seen signal the prices want to go there. Then the last part is your entry. These are the three things that we use. We first of all look at where the weekly, as the new week open, where is the weekly going. Then as in this case, this is Euro JPY. Let's start with Euro JPY. Let me copy this thing. So we have Euro JPY here. What are we looking at, guys? I tells you that higher time frame target, I have marked, I think we have three levels. I don't know, maybe the market is going to extrapolate. Sometimes it's going to expand with a long candle to reach to the highest key level. But what I can see now is that I have this double top here. I have this trend line liquidity here. I also have a fair value gap. So all these things are liquidity that are telling me the price is more likely going to go there. This is my high time frame target because I am looking at a key level that is above price. What is the key level that is above price, guys? We have a double top, we have a trend line liquidity, we also have a fair value gap. So this liquidity that are, anytime you see liquidity below a fair value gap is a strong price magnet. Then I am done with that question. I have my higher time frame target. Then the second thing is narrative. Narrative is, why will price go there? Okay, the price, I am saying the price is going today because we have taken out the sell side liquidity. We have closed above a bearish candle. That is, there is shift in market structure. Market structure has shift. Then we came back and respect what? Bullish key level. That's, we respected the fair value gap also here, respecting the order block. And then we close through a down close candle. These three things. One, we sweep a liquidity. 3, 2, we close above. That is market structure shift. Then 3 is what? We respect a bullish fair value gap, 3.3. And then the fourth point now is that we have closed above what? A bullish candle. This is an order block. So now we already have a bullish order block on what? This is also, we call it reclaim. We call it proportion block, because when we have a key level, a bullish order block that is coming from a bullish order block is non-time as a proportion block. This is the highest probability price delivery. So this tells me that when I'm coming this week, trading, looking for buys this week on GBP, on Euro JPY is likely going to give me a good result. So I am done with this number 1 and number 2. Then this one, key level price is going to use. In this higher time frame, we have the opening of the order block is 1. This, I will go to lower time frame. Mostly I go to the hourly, the H for the daily time frame, please. So when you go to daily time frame, price is going to, you're going to see where price is going to use. So you can see that this is your weekly order block. This series of down close, although we have so many weeks, I don't like the weeks. So, but this is where you're looking at, guys. And then we already have some series of up close. So how does the price close? It close with an up close. So we may demand a down close candle forming support. Then we rally. You can see this double top is so clear that price is more likely going to go for that. So this is a very strong prediction that the price is going to go up. But you know that you may have your prediction, but price may do otherwise. But this is, for me, this is one of my A+ trade. So I'm looking at the price. I have a clean target. I have a market structure shift on both on higher time frame and lower time frame. So everything is telling me bullish. Now I have this one. The only thing that is clear here is this one. Then the third aspect now is your confirmation and entry. So your confirmation and entry, what can you do as a trader in this case? What will you do? What will be your confirmation? Your confirmation is, you need to wait. This is how I do. I confirm my reversals. I want to see that what Mondays do. I don't trade on Monday. So I wait for Monday to see what Monday does. So then it tells me what Tuesday will do, and then what Wednesday will do also. So this is how I plan my trade. So how do I use to confirm my trade? Now, how do you confirm your trade? I want to see that. Listen to this part, very important. If Monday close like a down close like this, a general rule, okay, let me just use a general rule to explain this to you. What do I use? I said, I use what? I wait for Monday to trade. So if London session on Tuesday, London session, perhaps we don't have news on Tuesday, assuming we don't have any significant news, high impact news like CPI, FOMC, those strong high impact news. So FOMC and CPI, I think these are the one that normally come around Tuesday, Wednesday. So if I don't have this type of news and London session do not take out on Tuesday, I'm looking at the London session on Tuesday. If the London session on Tuesday do not take out the Monday's lows, one thing is very important. Let me repeat it again. I said if Tuesday, remember Monday is not trading day. If Tuesday London session do not take out do not take out the Monday's lows. So I'm looking at this is my so this is my, I say you're looking for confirmation. So this is your confirmation. If Tuesday, assuming Tuesday came in and do not take out Monday's low and trades, we're looking at the London session. Then I'm coming in the New York session to look for what? To look for expansion. Let me show you what I mean. Assuming this is Monday. Now, if Monday came like this, and then Tuesday London session has already reached around this level. So Tuesday open, if this is a down close, Tuesday open, though it does not take out Monday lows, but the London session has already traded what? Do not take out, this is Monday's low. And if we fail to take out Monday's low, you're looking, your Monday is my focal point. And we do not take out, by London session, we have not taken out this low. And then price has already breaking a structure. So with lower time frame confirmation, you need to see this lower time frame confirmation, this market structure shift, something like this, a break of bearish resistance level. If you can see this one before New York session open on Tuesday, then this will be your trade. I don't know whether you understand this logic. What I'm looking at normally on all price, not just this one. It may happen sometimes, it may not be like this. What I'm looking for is just Tuesday to take out Monday's low. If Tuesday take out Monday's low, then I will be looking for, if Tuesday, normally Tuesday, I come in the New York session. Let me just explain this thing vividly. On Tuesday, I'm coming on New York session to watch what price has done in the London session. If we take out London session and we have done, two things will happen. Either Tuesday will take out Monday's low, assuming this Monday, it may take out Monday's low and do something like this. This is market strategy. The New York session will be like this. This is where I'll take my New York session and then I'll close, I will collapse my trade. If price reach to the target before Thursday, I will collapse my trade. But if price has not reached to my target before Thursday, I will allow the trade to keep going through Thursday. So Wednesday and Thursday is going to be an expansion. Monday, Tuesday, Wednesday, and Thursday is most likely is going to be an expansion if we have not reached to our target. So basically, this is how you're looking at what Tuesday. Tuesday most likely will show this type of signature, this break in market structure. You want to look at it, not during London session. You're looking for it during New York session, and this will be your trade. So what do you do on Tuesday? You're trading, your plan should be Tuesday, you should be opening your chart during New York session. On Wednesday, your trading should be what? London session. If you have already have this signature. So it's going to be a continuation like this. This will be Wednesday. If we have not reached our target, Thursday also will be what? London session. So see, what will be your plan? On Tuesday, Monday, no trade. Tuesday, New York session. Wednesday, London session. And then Thursday, New York session, London session. So we have 3 London sessions. So now, okay, now assuming then London, New York, assuming this is how Tuesday and Monday close. The Tuesday and Monday will close as an inside bar like this. So the close, instead of Tuesday to take out the high of Monday, it closed as an inside bar inside Monday. Then the protocol is now shift to what? It shift to Wednesday. So we are waiting for Wednesday to do just exactly what we expect Tuesday to do. So we expect Wednesday to do exactly what Wednesday we are expecting Wednesday. So let me show you what I mean. I think even here we may have something like that. So let me see what happened this week. This is your key level that you want to trade from, right? So if this is your key level that you want to trade from, this is what? This is Friday. This is what? This is Monday. So see what happened. If this Monday, you see that what you'll be looking for is, you can see that Monday came in and engaged the key level. So Tuesday, do not take out what? Monday's low, but it closed as an inside candle. So when it closed as an inside candle, remember what I say, when Tuesday closed inside the range of Monday, what you should be looking for, you are using this protocol on Monday. So let's see what happened. So you allow the London session to do what? To take out the low of what? Of Wednesday, or to do that market structure shift. So let's see on the hourly time frame. So we're going on the hourly time frame to see. So all what you're looking for is that pattern, that single market pattern. So let's see. On Wednesday, this is how Wednesday opened. So we took out, because it's an inside day, we always want to trade below the opening price of an inside day. So see what happened. So price did what? It came here, and through New York session, we have not do the market structure. So our trading now shift to what? We now shift, because here price reverses during what? The close day. So when you're trading on Tuesday, on Wednesday, remember that if this one did, then on Thursday you should be trading what? The London session. Remember what I said? You can see that this low here on Thursday, because this is Wednesday did the reversal, then this one, your trade will be what? On Thursday, your trade will be on what? On London session. This is your London session. This is your London session. Then coming on Friday also, because Wednesday is the same thing. So you're still think you're looking for, on Friday, you're looking for, your trade should be what? London session. You can see your good trade will come during what? During London session. You can see all the good trade came out during London session. So if this is actually what you do, because you may have also some other price action. So this is basically what good trade will come during London session. You can see this expansion came out during London session, the 1 a.m. candle. This one also, the expansion came on London session. So because this reversal here happened on Wednesday, remember what I said before this place. I said that if Tuesday do the reversals, Wednesday you're going to look for London session, low of the day. Thursday you're going to look for London session. But in this case, Wednesday is the one that did the reversal. So Thursday, London session, Friday, London session. So basically, you can see the plan. So, but Monday is a no trading day, always. Monday is the one that we're going to use to determine what is going to happen. So I have given you the prerequisite of what to look for, how to check for your confirmation. Your confirmation is this price signal, change in market structure. It may be on this time frame, 30-minute time frame. It may be on the only time frame I'm looking for market structure shift is the hourly and then the 30-minute time frame. These guys are enough for you. So see what I'm saying. These guys are enough for you to trade. See, coming on London session, we already have what? Market structure shift before the London session open on that day. So you're coming in looking for your trade right on the London session. So where is the London session? This is the 230 candle. See, your stop loss is below. and you can halt your price. This is basically, maybe your entry is on this, and then your stop loss is on the low of the day. So having your target, I'm just trying to show you what has happened previous week. Price action. This is 1 to 5. Okay, this, you see what this one is already 1 to 5. Okay, coming into the new day, what has happened, guys? We already have what? Market structure shift. Also during London session, we have what? Market structure shift just at 2 a.m. Also, you make your entry. This is your entry, guys, and this is your stop loss, and this one is 1 to 2, I think. Yeah, it's 1 to 2. So 1 to 2 plus 1 to 5 is what? 1 to 7. So you have 7 IR, because this one already has hit your target even before coming. This London session has already hit your target, because before coming, look at what I'm saying, has reached your target. This high here. So you have 5 and 2, making it what? Making it 7, because you can see here, this is double top. See it here. Just ignore this week. This is news manipulation. This is 2. This is your target. This is your target. So this is the target for this week. So the target of this week is just previous week high. So, and that is exactly what price is doing, guys. So coming into this week, guys, this is what you should be looking for. Then I'm going to show you those pairs that I have on my plan, and this is exactly what you're going to do. Avoid Monday trading. Look for narrative. Look for key levels that price is going to get in, key levels the price is going to use, and then this is when you start engaging in the market. So in this is actually what you're supposed to do. This is actually what you're supposed to do. So you can see that last week, what happened? We find that this fair value gap here is where price use. So this week we have the order block. The order block is where we want price to come and key in from there. So this, we have our key level. This is where we are expecting price to do the business for us. This is where we're expecting price to do the business for us. So we have the price key level. So we have the key level that price is going to use. So let me get into another pair. So basically, we can see from this is my watch list. This one with rate, but the XY, Euro, Pounds, Euro, GBP, Euro USD, and GBP USD, and then the gold, this Bitcoin, and these guys are stagnant. I don't change them. Say they are there, because this one I'm trading them. Any of them have it on account. The major pairs, I have the account that I used to trade on them, so I don't remove them, because they are used intraday trading. Even a small time frame key levels, I use them. I know how I planned, have my hourly bias, I can use how to trade with them. But the rest of these guys, these Bitcoins, I trade them on weekends. So on weekends, this is when I trade Bitcoins. So these guys, the last 1, 2, 3, 4, 5, 6, these are the ones that I'm going to show you. These are the ones that I have my plan on the weekly for them. In each and every one of them, you will see similarities on how I came about with them. So let me show you guys. So I've told you why the last guys they are there. These are my major pairs. These are guys, they are responsible for the movement of the other ones. So let's go to NZD USD. So you can see what I did on NZD USD, because this price is a doji. So what am I saying here? I'm saying that my trading will be either above the doji for sell, or below the doji. This is my plan. This is the narrative. My bias now is here. I have two things in my mind. I should be waiting for price to engage the liquidity above the doji to sell, or I wait for price to engage the liquidity below the doji to buy from. So this is how I know if price open inside this dealing range, inside the high to the low of this doji, I'm not doing anything. It doesn't matter even if it is Thursday or Friday, I'm doing nothing. Why is this thing important? Because this thing is the extreme high. I think this is high is from March 2020. So you can see that this is a significant high. So Price may break through it, price may reverse, price may consolidate. So three things: price, if price has reached to this higher time frame target, three things will happen. Price may break through it and continue going higher, price may consolidate, or price may reverse. So if price reverses, then we may see that price will fail to respect this level and will continue. If it does not respect this level and continue like this and close below this level, then we can say the price has reverses. But in this case, we don't know what is going to happen. What we know is that we are looking at what is going to happen on the previous. So this one, there's no need of going to lower time frame because my key levels is the high and the low of the doji. Basically, that is just that. Okay, now look at this NZD, look at this euro pounds. I'm talking about pounds NZD. It's the same key level, guys. This guys also is coming from a significant key level here. You can see that this fair value gap is coming from this key level, guys. Sorry, I didn't mark it correctly. I didn't mark the other side of the key level. This one and this one, you can see also there is a breaker. So let me just zoom it so you can see a breaker. When this market starts to shift, this is the fair value gap. So I think price is coming from this level. So you can see what is happening. So last week we closed inside. Then you see what? Why am I marking this level? Why am I saying that we're expecting price to go down on this one here? Okay, this is also an order block. And you can see that we have what? We have fair value gap below price. So before I plan my trade, I must see where the higher time frame is going. Which key level is the higher time frame going to? On the previous one, I said that it's going to either the high or the low of the key level. But in this one, where is price going to? Is going to these fair value gaps, the old low and the fair value gap. So this thing is telling me this is where they want to go. And you can see from here, there's no any key level that can stop price reaching to this level unless they want to manipulate the market. Because if you see this down close candle, we have already closed up below it. We would have said, okay, this down close candle is going to hold price as a support, but see what happened. Price have already closed through it. So we're going to see a resistance here and then go down. So what can you do? You allow Monday to trade. Then Tuesday, you're looking for something like this. Market start to shift on Tuesday. Then you can participate until price reach to this level. If price reach to this level, it may even continue going down because you can see that this has also liquidity, but you want to focus on the first target. This is where you take majority of your position. If price continue going down, then that is when you may use, but you don't just say, okay, price is just starting showing some sign here and then start targeting these levels. Target the closest draw. Then let's go to the next target. Okay, let me go to lower time frame, please, and say, okay, which key level is price going to use? Okay, now, for instance, this is a breaker. This is where price, the opening of this candle is an order block, is a breaker. All these things, they are key levels. This candle here is a key level here. So anytime price is engaging this key level, I may be expecting that this level should hold price. So the open price of that up close candle should hold price. So anytime I see price came in here, remember I'm looking at Tuesday. If on Tuesday price has already reached to this level and then I start seeing this market strategy, then this would be my possible target. So basically, these things are very easy, as you can see. It's not difficult. What you need to do is just need to see where the high time frame is going. Look at this one. You can see all my trades have similarities. What is similarities, guys? You can see that here we have what? We broke a structure, and you can see I'm always looking at what the closest key level. This is double bottom. On the previous one, on Euro GPY, you can see that there is what double top. Here we have double. You see, majority of my target are previous day week high or previous day high, previous week high or previous week high. I'm looking at also fair value gaps. I'm also looking at liquidity proof, that is double top and double bottom. So this double bottom here, I'm seeing that price is going to go for this after this market structure shift. But which key level is this price going to use? Okay, you can see that I have marked this previous Friday's high. This is a range in price. So when you see this is a consolidation, so I'm expecting price to engage this level and then it will snap through this low. So, or it may retrace back to this rejection block. So I don't know which one price is going to use, because this rejection block is exactly where this weekly market structure shift occur, which is the weekly breaker. So anything can happen here because this rejection has happened here. So sometimes it may not give price opportunity to go further up because we have the retest of that key level. But perhaps anything can happen in the market. But what you need to do, wait for Monday to trade. You can never trade Monday on this type of price action and expect good result. So wait for Monday to trade, then you can participate. So okay, see this one, guys. Remember the Euro JPY is going up. If Euro JPY is going up, then we expect the GBP JPY should also trade up. So why should trade up? Because the pounds and the GBPs are also trending up. So these guys are going up, and then we can see that why am I marking this level? This is price is rejecting from the lows, it's sweeping the lows and closing back. You can see it's respecting this support level. This rejection block is respecting the support level, is sweeping liquidity, and is closing like this. So I expect that this Monday, Tuesday should what? Send price to this key level. So this is my weekly key level. So if price open, come down, form a signature on price. So I don't want to price just open like this and go up. If it open and go up, maybe like Wednesday, Thursday, I think I will see some reversal on Wednesday, then price will go. If Monday, Tuesday reach to this level, then I will change my gear that price is going to reverse. But if price open, go down like this, then this is the signature I'm looking for. On the hourly time frame, this is the signature I'm looking for. Market structure shift like this, then I will enter depending on the day that this is formed. But we want to start looking for this signature from Tuesday to what? To Friday, to Thursday. Let's just use to Thursday. So we'll learn to see this signature from around these days of the weeks. So sometimes we say, okay, what is the key level now? Okay. You can see that already we have what? We have bullish engulfing. We have price is sweeping. So I'm seeing that more likely that this with this rejection here, it's more likely this is going to happen on Monday. But I like to see that Monday first. If Monday now close above this candle because the rejection has already happened on Friday, if Monday fails, if Monday close above this candle, then this telling me that okay, Tuesday I'm going to look for just intraday market structure shift, then I will enter. But I wish that Monday should go again and take out this low again. If Monday came down, it's going to give me now is as the way as price is going away from my key level, as price is going down like this, is offering me, is increasing my what? My reward. Because as price is going closer to my target, it's reducing my reward. Because when I enter, I will be very close to my target. But as price is deviating, the deviation of price away from my target is offering me more reward. If I can enter, I find entry around this level, the target will be matched. Assuming what I'm saying here is that if the market structure shift will happen below this level like this, then you can see that I will have much target. But if the market structure will just happen around here, intraday market structure shift, then you can see that Monday, allow Monday to trade to see what is going to happen. Then you can see that the number of reward I'm going to get here will be higher than the one I'm going to enter. I'm going to get this. So basically, everything is telling me that we are bullish on these guys. So, but when the new week up candle open is going to confirm this thing. Sometimes my weekly up candle open with gap and then engage this low. So we don't know what is going to happen in the market, but you need to plan. This is where planning is very, very important. I think I've shown you this one. You can see majority of my trade, all of them have what? Weekly target. All of them, the weekly have target, and the target are always key level. Double top, fair value gap, double top, fair value gap, double top, fair value gap, liquidity, and fair value gap. The concept of ICT, the concept of smart money is based on liquidity and inefficiency. So you can see all of my target are framed on what? Liquidity and what? Inefficiency, and not fair value gaps and what? And liquidity pools. So basically, this is what we can see. Let's see this one. See what is happening, guys. See what is there. It's this. You can see all these trades have the same signature. We took out the liquidity that is there. We took out the liquidity that is there. So what do we expect, guys? We expect price to go up. You see this 1, 2, 3 triple tops. They are related to each other. So as this price has already closed above the opening price of this guy, so I expect that Monday should open, go down, create the structure, and then I've already shown you the confirmation, everything you're looking for. You can just close your eyes and then just come on Tuesday and look for, on Tuesday, this is what you, on the London New York session, this is what you should be looking for. This is enough. We have a protected law, which I've already shown market structures. Then you can get in New York session and take your trade. That's all. If you cannot see this one on Tuesday, wait on Thursday. If price keep dipping down, just wait for it on Thursday. On Wednesday, you may see something like this. Then you're coming on New York session and then you engage in the price. It doesn't matter when the this is going to come. So when the reversals has already occurred, the reason why you don't want to be, me, I can be able to trade the reversals. Even these reversals, I traded it. I can be able to trade the reversals. But as a new trader, we want to teach you to allow the reversal to happen. And the best trade are on the continuation. These trades are easy. When I place this trade, I close my laptop. I don't even need to monitor. But if I'm trying to catch reversals, I always monitor my chart to see, is the reversal still confirming or it's not? Because reversal, you're trying to catch the bottom. You don't know whether price is going to stop or it's not going to stop. But if it is continuation, you already have everything is there. This is when you say, assuming you want to catch this reversal, see, guys, if you want to catch this reversal, you don't have where to put your stop loss because price may continue going up. But when you wait for the reversal to occur and then you want to catch the continuation, this continuation here, if you reversal is this one. So this continuation here has already, when you enter here, you don't know where to put your stop. But this is this one catching the continuation gives you a clean price trading plan. You have where to enter, you have where to place your stop loss, you have your target. But if you're catching reversal, you don't know where to place. You're just sometimes that's why majority of people just wash their account because of this. So basically, wait for the reversal to form on Tuesday London session, or on Wednesday London session, or on Thursday London session. It doesn't matter. Allow the London session to show you the reversal, and then sometimes the reversal will come on the New York session. If the reversal come on New York session on Tuesday, then you should be looking to trade London on Wednesday and catch the continuation. Guys, let's go into the order. Okay, this one, what am I looking for, guys? Okay, this is one. What am I looking for is that you can see that we have run this double bottom. This guy here is far from the target. So if this one is far from the target, why do I do this one? Let me see on the lower time frame. Okay. Okay, what am I saying here? This one is not part of the trade I'm going to do this week because I need to see price. You need to close. If Monday expand and close above this level, then it is likely that I'm going to use this level unless we see a daily candle close over this level. If I see a daily candle close over this level, then I will use this level to trade to this. You can see 1, 2, 3 top. You can see all my trade, they have similar signature, similar target. It may either be a fair value gap or it may be what liquidity pool. And this is the basic, this is the concept, this is what makes smart money concept, liquidity and fair valuation. Let's see the last one. Okay, why do I put this one also here? It's the same thing. Why do I choose this one is because of this. I'm expecting a pullback after running what? A liquidity pool. I think there's large liquidity pools. We have run this liquidity and then price is beginning to form a range. Just like the one I show you there, range high and range low. So this range low also may offer me a price action, but let's see what is happening on the daily. So the reason why I'm taking this one is because you can see that this one is similar to this guy. Not this one, not like this one. Where is this guy? I think it's DVP-USD. Okay, like this guy and this one, they have similar signature. We have run the low, we have what? We have forming a swing low. So if we have short-time low, we say, so this became a short-time low. So this one will become a long-time low, and this one will become a short-time low because when we have Monday creating a lower high, so we have this short-term low as formed here. A short-term low is when we have a lower high to the right and lower high to the left of it. So this became a swing high. If Monday trade and close above this level, we may find a lower time frame market structure shift. Then I'll go on the London session and start trading My first target will be there. Second target may be on this key level. So this is how I'm looking at this week. I believe that you can find this video to be very, very insightful. I believe that you have, if you have not even gained something, this is the two things you get. The concept of smart money is based on liquidity, and fair value gap, efficiency, fair value, fair valuation. So this is the, if you don't know anything, just master this two. You are done with what? Done with trading smart money concept. Master how to trade liquidities and master how to trade fair value gaps. And this is one of the part of things we teach in our mentorship. When this is what we teach in our mentorship in A1 FSP. You can see, when you see my student trade, you can see these signatures are always there. Liquidity and fair valuation. I will need to see them on the higher time frame. That is where I determine my daily bias. My daily bias or my higher time frame bias is always seeking for what? Liquidity, or feeling what? Rebalancing and inefficiency. Then I teach them when to look for that. When is he going to seek for that? I teach them that one on the concept I call the market cycles. When you understand the market cycle, this is where you will know. Basically, this is when I teach them when to look for market. When do you know the price is seeking a liquidity, and when do you know the price will be seeking a inefficiency? I teach them this concept on the topic I call the price cycle. When you understand the price cycle, you will know which one are you going for. For this case, we are on this phase of price action is we are seeking fair value gap. Why? Because this is the phase of the market. The market is supposed to seek what? Seek fair value gaps, seek inefficiency. So, and then the other part is we are looking for liquidity here. Why are we looking for liquidity? We are coming from a fair value gap and we're looking for liquidity because this is the phase of price delivery. The price is expanding into what? Liquidities. Please, guys, watch this video. We have a free Telegram group. If you want to join, you can join from our free Telegram group where we give you a lot of information about how to trade. We have so many free videos, free PDFs on how to determine your daily bias and how to also read price chart easily. We have a lot of video how to trade. Even we have a free PDF on how to trade the order block effectively, not just the way last down close candle before an upward, last bearish candle before a downward. This is not how we trade order block. There is a systematic and logical way to trade an order block, and everything is documented on that PDF, and we have shared it to our free Telegram group members. If you want to join this group and be part of our team, you are going to use the link on the description of this video, and you can join there. You don't need to pay anything. That group is free, guys. You have signals, we have information, we have 3 mentors, not somebody, me alone managing the group. We have three mentors there. We are trading the same thing, we are sharing the same information. So you can't say that that group is so much active. It's a group you can ask questions, we can answer your question, and everybody is free to participate. So I believe that this week should be a profitable week for you. Even as you monitor this chart that I've shown to you, make sure you capitalize on one of these pair and make money this week. Until then, good day and good trading.